today I'm delighted to have on the panel a lot of distinguished guests. And I'll start off with Dan Klinck, based in Kigali in Rwanda. We have Dr. Goodluck, who's based in Lagos, Nigeria, along with Patrick. And then also we've got Suez, who's at the moment in Ankara, but joining us today. So I'll give you each just a couple of minutes to introduce yourself and just with a bit of background in terms of your interest in this topic. So Dan, over to you.
Thanks, Emil, and a pleasure to be on the panel. My name is Dan Klinck. I'm from Montreal, Canada, but I've made Kigali, Rwanda my home over the past 10 years. East African Power is the company that I founded. Over the last few years, we've been able to take 5 projects through the exploration phase to the development, construction, and operations. We have an additional 5 projects in construction and a growing portfolio of about 25 projects. So in general, we're a 200-person company across all of our subsidiaries. We have an ambition to kind of grow outside of East Africa. We might get stuck with our name though. But we have a wide portfolio that's growing. We're very passionate about renewable energy, about access to power, and that's the development company that we've based here in Kigali. It's an excellent place to do business, to have base, but of course, the topic today is about Africa's power demand. It's a fairly small country in comparison to the rest of Africa, but we've definitely made Kigali our home, providing expert engineering services in solar and hydropower technologies. Pleasure to be part of this panel. Looking forward to the dialogue. Thanks, Emil.
Hi, everybody. This is Goodluck Enimakpokpo from Lagos, Nigeria. I've been in energy infrastructure development over the last 20 years, and I mean, it's a sad paradox that a country, countries in Africa so much endowed with natural resources is suffering from energy poverty, right? So though I've been around for a while, I currently work for General Electric, where I currently support the power business in Nigeria and across Africa, yeah. And I'm really excited to participate in this conversation today, and I look forward to sharing my thoughts. Thanks.
Excellent, thank you very much, Dr. Goodluck. Patrick?
Yes, good morning, good afternoon, good evening, from wherever you may be watching. My name is Patrick Udechukwu. Been in the energy industry for about 14 years. And over that period, I've had the good fortune to work with some multinational organizations, General Electric, just like Goodluck, and ExxonMobil. Predominantly on the project management, project development, transactional and deal related activity. And over that time, I've had the period of the privilege of working in Europe, specifically in Italy, and a little in Germany, projects in Germany, and also in the US. And after leaving ExxonMobil early this year, I've been involved in project advisory, specifically for private sector developers. And my projects cut across captive power right now, a 5 megawatts power project, gas-fired, and also in wastewater management. And diversified a little from energy, but energy and power still is my first passion. And I'm very excited to be having this conversation today.
Thank you very much, Patrick. Suez, over to you.
Thank you. Thank you for having me. My name's Suez. I'm from the Sustainable Energy Council. So we work closely with local governments and associations to design summits that address pressing questions in the future of energy markets. So we look at these issues with a diverse range of key stakeholders, typically focusing the conversations on climate change, economic growth, trade, PPP, policy, and technology, really with an end to catalyze an inclusive and sustainable energy transition. So we're also big believers in the sustainable potential for hydrogen, and then unleashing the potential for renewable energy, especially in emerging markets. So it's a pleasure to be here.
Excellent, thank you very much. So just briefly, I'll just explain our agenda for today. So we're going to look at two main points. We're going to look at how can Africa achieve cost-effective and sustainable access to power, and with a couple of subsets into that. And then our second point would look at the political will to drive the right policies and reforms in the power sector. You know, what is required for governments to attract investment in this critical sector. So I think we'll kick off with Dan. If I can give you, about 5 minutes. Well, hang on, before I do that, let me just quickly set the scene. What I normally do is just to look at, from ABiQ's point of view, we typically forecast what is the demand for power, and we just use, we extrapolate a lot of data and do a lot of research, and then look at population growth. So you use a lot of the United Nations modeling, and then look at what is the demand going to be. So on that basis, we kind of come up with, a forecast per country. And then, so drivers for growth. I think, by 2050, Africa will have, 50% of the world's working age population, in other words, those between, let's say, 20 to 60 years of age, will be based in Africa. And that's enormous growth rates if you look at it. So just over the next 10 years, we look at Central Africa, population growth said to grow to be in excess of 30%. We have West Africa 28%, North and East Africa as well. So it's very large numbers for growth, for population growth. So in other words, a big driver for demand of future power. Just looking at total power demand, we know that there's around 180 gigawatt of installed power capacity in Africa. Our forecast is that for sub-Saharan Africa we have probably 50% still without access to reliable power of the population. You're probably going to need around 220 plus gigawatts to be installed if you just want to catch up, plus provide power to the growth as well. So a massive market in terms of growth going forward. And then assuming $1.20 per watt, this is kind of a rough value. It's coming down every year just from a renewable point of view, but that's $270 billion of investment required just to provide all of Africa with power. So how do you pay for that? And which is part of the question that we hopefully pose today is how do we go about meeting this enormous demand? So on that note, I'll hand over to Dan. So from your point of view, Dan, how do we make this work?
Sorry. Great question. How do we make it happen? I think it's important that there's a lot more studies that take place. I think the best decisions are made when there's more accurate and reliable information. And I think that it's one thing to use as a basis point population growth, but I think it's very difficult within even the power pools to forecast where demand is going to go, what it's going to trend against. And I think that it's very important to kind of use different emerging market examples and then bring that back home and look at the type of capital that's needed. And then to look at the demand forecast, of course, we're going to see a hit over the next 5 years. I think this is inevitable in the global environment that we are in. And of course, what we're hoping for is an African Marshall Plan, where something a lot more serious than printing money from a few of the Westerns or from the maybe our friends with the Belt and Road Initiative that can drive into the economies with PPPs, 100 or 200 million. I think what is truly needed is something that is closer to maybe 100 billion over an annual basis for a decade in order to really put Africa on its trajectory of growth. Of course, that itself, and hopefully we do see a $1 trillion plan for Africa really take place, become robust, and to appropriately tackle poverty. Of course, the renewable energy and the demand for power that would come from something so robust is, I think, very underestimated. And I think when you look at the short term, there's a lot of struggles of the imbalances that have taken place in each of the power pools. So the East African power pool is flush with a significant amount of supply and in its pipeline, short-term issues with the demand, but the lack of investments in the distribution and transmission have led to a lot of gaps and a lack of integration. So how do you get clean, reliable, modern and affordable power to those that need it to drive the economy? Really has to do with a need for greater integration, not only within the power pools in the countries themselves. Greater integration can really drive down costs, because it's going to be significantly more cost effective to put in let's say a 200 or 300 megawatt plant, a solar power plant in Zambia, and bring the power maybe to Lubumbashi or Kolwezi. It makes more sense to bring in a major hydro project in Tanzania or Ethiopia, and then share that with a neighbor where perhaps they don't have those same natural resources. So certainly integration is a core component to affordability and smoothing out the supply and demand gap. So what takes place is that each country working in isolation and not in integration really drives the imbalance. It slows down actually supply where it's needed. And of course that curtails growth, because unless there's a very healthy trajectory for least cost power development plans on a nation's basis, it's very difficult for them to attract the type of foreign direct investments to drive their economies. So I think from a numbers perspective, more research really needs to be done. And I think they need to be tied into appropriate models. So we have some countries that end up, just attaching it to GDP growth and 8% or 10% demand. And it doesn't happen that way. There's major infrastructure projects that take place, not only in isolation to a country's needs, but in the areas. And I think that can drive greater peace, greater prosperity. And I think there's been enough walls that have been built up. Those need to be torn down, and electrical lines can really do so. So I'm excited. I'm very bullish about where, and as you had mentioned about the population over the next 10 years is one thing to look at. But really 2050 is just around the corner. We're talking about a jump from 1.25 billion to 2.5 billion population in 30 years, and in 80 years, 4.5 billion. And when we talk about those types of numbers and population growth, that's one area for us to measure where demand is going towards. But I think we need to be a lot more bullish and prepared for that. And let's drive down the cost of capital. The world needs to step up. They need to prioritize their investments in Africa in a post-COVID-19 environment. And green investments, renewable energy needs to be top of the priority. So it's a bit of our perspective on things, and thanks for the opportunity to share.
Thanks a lot, Dan. Dr. Goodluck, what's your take on this?
Absolutely. Thanks, Dan. So I'll just take it from where Dan stopped, right? And I would like to talk about the electricity supply sector itself, right, across the countries in Africa, especially the sub-Saharan Africa countries, right? So I would say that until the governments of these various countries carry out the correct reforms within the electricity supply chain, it will be difficult to attract foreign investment into the sector in this continent. And that's the truth. If you look at the various countries, whether Nigeria, South Africa, Tanzania, Angola, or even Cote d'Ivoire, so you realize that most of the activities are of that with the kind of stats you've just released, $33 billion yearly, what that means is that governments cannot, it's difficult for government to support this kind of investment with their balance sheets. And this is really very difficult. So what that means is that the sector itself must be unbundled. all these countries must look for ways to unbundle their various electricity supply chain, create credible off-takers for the electricity, all right? And then government looks for a will to privatize, the different bundled, unbundled entities, whether generation, transmission, or distribution. That way, investors will look at the continent and say, okay, well, there's credible, reform going on. Currently have as a really got any capital into the sector. And I'll give some few examples. Let's look at South Africa. Now, look at ESCOM, right, deeply about it. I'll just talk. If you look at ESCOM today, because that's supposed to be what Africa has to show the world, that we can run something successful. About 50 to 50 gigawatts of power, and it was going well until recently that a major energy and all of that. And if you look at all of the issues around, you see that this is an entity that is owing almost like over 400 billion rand, which means that it's heavily indebted. All right, kind of entity cannot attract foreign investment. It's really difficult. Okay, so and again, government really, even though you want to say, well, ESCOM is corporatized and all of that, but you see undue interference from government. And Nigeria is the same thing. Across Africa, Angola is the same thing. Undue interference from government. Legacy assets is difficult to maintain, all right? And you can't build electrical infrastructures based on the politics and bureaucracy of fiscal budget. It's completely impossible, all right? So you need systems that is efficiently managed by private entities to come in and help government drive. Government's responsibility should be on setting up good institutions, strong institutions, and incentives, enabling markets, okay, enable the investors to do business and well incentivized, and then you will see capital in the market. So I would say that the first thing to do is to implement the right market reform. And that will help, credible, that will help attract foreign investors. Then, and if you look at it, some other policies truly that can enable investment, because this is a huge capital, business. If you look at it from generation through transmission to distribution, for example, if you take a rule of the thumb, $1 million for 100 megawatts. What can 100 megawatts do? What that simply means is that within the generation space alone, you need huge capital, right? And to be able to do that, it means that government has to incentivize the investors, the foreign investors that are coming into the continent to do business in the power business. And there are many policies that government can actually do, or execute or legislate to support investment, and things like tax holidays, things like, good legal reforms that will ensure that there is disputes, they're easily resolved, things like custom tariff exempts and all of that. There are different policies to help investment, foreign investment in that sector. So I would stop here with this market reform, and as we progress, I would talk about other areas that I think that the government of the various countries in Africa can actually get involved in, to give Africans, access to power. Thanks.
Excellent. Thank you very much, Dr. Goodluck. Moving on to Patrick. You can add to that.
Yes, thank you, Emil, and thanks to Dan and Goodluck for laying the foundation. I completely agree that there is really no silver bullet to this problem. There is no one solution. It's Africa is, even though we take Africa to be one market, but in reality, it's 54 markets, it's 54 countries. We could begin to break down to sub-regional level and then have clusters. But ultimately, there's a lot of diversity, with respect to geography, demographics, infrastructure provision. So, but one thing I would like to add to government reforms and integration between countries, which Dan and Goodluck have mentioned, is one common thread that you will see is the availability of mineral resources in Africa. Now, whether you're going from the oil and gas plays in Nigeria to Angola, North Africa with a lot of gas reserves, and you begin to look at the mineral resources in Democratic DRC in South Africa, one thing you will definitely see, a pattern that you will see, is the mineral resources required not just for energy generation, but especially in today's climate, when we're looking at energy transition, the minerals required to power energy transition are here. And I'd like to give you a couple of examples. So let's take DRC, for example. It's 3/4 of the world's cobalt reserves. Now, cobalt, as we all know, is a very critical element in batteries manufacture. So the lithium-ion batteries, which are very important for energy storage and basically for solar hybrid solutions, require a lot of cobalt. Now, DRC has the largest reserves. However, lithium-ion manufacturing is specifically restricted right now, you'll be surprised, to China and the US. Why? Because lithium is, again, produced in both places, China and the US. But cobalt, 46% of the reserve of the requirements for making batteries is cobalt. So we need to begin to change the dynamics whereby we begin to have industries here close to the resources. What does that do? Is ultimately we're beginning to change the factors of production, whereby we can manufacture, we can generate the minerals locally and begin to use them for industrialization, have those industries in Africa. It's a huge opportunity, and it will go a long way to define the energy transition. Another very simple example is chromium. Platinum again. So South Africa is 70% the largest reserves of chromium platinum in the world. Now, these are critical minerals that are used for wind production, wind vanes. So again, you ask yourself, where are the industries that create wind turbines? Right now, they're in Europe and Scandinavia.
Yeah.
So you say there is a huge opportunity for us to begin to, as Africa, alter the factor of production, bring these industries locally. And this is where I tend to agree with Goodluck with respect to governments setting the scene and beginning to make, the regulatory, the fiscal policy, and the regulatory land frame, making it easier for the companies, so beginning to attract these companies, so whether it's electric vehicle companies, it's battery energy storage companies, this is the technology that everyone globally is transitioning to. If we can begin to factor get into the factors of production, industrialize and boost Africa's ability to not just be a raw material explorer or exporter, but become a source of industrialization, then we'll begin to affect pricing. Then we'll be in a better position to have projects that have lower costs, because you're going to cut off the costs, in shipping, in exports. It's going to be maybe shipping from one African country to the other. In the long term, in addition to the things we've heard, if we can alter the factors of production and bring industries close to the raw materials, which are available in Africa, that's a huge opportunity. This is an opportunity both for the public sector and the private sector. Why? Because once you see the gaps, the public sector It's providing the fiscal policy, the regulatory frameworks. The private sector is working along with the public sector in PPPs. I think going forward, the projects, a lot of the projects, power projects, will be PPP inclined. And simply because we all are in agreement that the governments don't have the balance sheets to meet the deficit. The energy deficit, energy access deficit cannot be done by the governments. So there has to be a handshake, between the public and the private sector, and PPPs provide that enabling structure for that. So, so that's one way of being able to affect the cost and ultimately having a cost-effective, power, availability in Africa.
Excellent. Totally agree with that view, and I think we'll take it a bit further in the next round of conversation. So, Swaz, your point of view?
Sure. Well, first of all, it's really fascinating to hear, echoing round and round the panel once again, the need that everyone seems to agree for integration within the African continent. And as Patrick mentioned, such a diverse array of needs, of energy needs, but also of energy strengths in terms of what each country is capable of within the energy mix. So it would be interesting to see, how national energy plans can begin to integrate to really cater to this. And thank you also, Emile, for the population growth data at the beginning. Yeah, it's an important question, perhaps not $1 million question, but a $2.5 billion question when you consider that power shortages and outage cost the African continent about 2% of GDP. So probably quite a conservative figure still. So from my own perspective, fascinating to hear Dan's thoughts about the need for renewables. If I can add a question into the mix, just commenting from where I stand, when we speak about sustainability and climate change and the need for renewables, perhaps I can ask my co-panelists, how do you fit this discussion within an African context? Because historically, in my own experience, this has been treated as a perhaps UK or EU or US centric conversation. So how are you looking to integrate a more sustainable energy mix within Africa?
Dan, you want to maybe comment on that? Then we can ask Patrick.
Yeah, I think often, there's this. When I arrived in Rwanda many years ago, and I went through the Vision 2020, the Vision 2030, the Vision 50, and there's something amazing here of really looking at, and there's a great awareness. And I think that even in the past 10 years of being here, I've seen the tree cover maybe like cut in half, right? I think if we look at what has happened just in eyesight, the retort from here and the demand and the drive towards a renewable energy future is very vibrant. It's top of the conversation. Each project we do goes through really robust environmental, social governance management plans. The long term is really kind of buried in. There's massive amounts of investments that have poured in, and I think prioritized Rwanda, I think, in its push towards universal access to power through renewables. And I mean, we're on about a 5-year trajectory right now. I mean, it's very exciting. I think there's a lot taking place. Rwanda's a lot smaller. And so money goes a long way, but with a great expansion plan that is taking place and the benefits of the renewables that are being built here in the hydro space, but about 50% of that's going to be hit off of off-grid, a combination of mini grids and solar home systems that are driven. And so that dialogue that the answer is a green answer is very at the forefront. And I don't think it's actually a Western concept. I think it's an African concept, and it's been driven from the policies. And I think those countries, let's just say such as Rwanda, that make it the forefront of their policies, do get rewarded for that. When I arrived 10 years ago, and saw that they developed a special Rwanda Development Board. This board was created to be a driving one-stop center for driving foreign direct investment in Rwanda, and they dedicated the entire almost first floor of the building to renewables. It was about displacing diesel. The grid was 60% dependent on diesel, and now that's been, maybe we're at 20% today, but within, I'd say 18 to 24 months, we'll be down to 5%. And so that generation mix has changed because it was a policy, it was an African, it was a Rwandan-driven policy, and we as a company were invited to follow that policy, to invest behind that. And I think that's what needs to take place. I think in that national electrification plans, if policies are put forward to prioritize renewables, and then I think things move forward in the right way. But we're talking 600 million people without access to power, and I think that goes beyond what we think, and we dialogue about the larger the larger demand. And I think you're so right to bring up the impact of climate, of renewables. And I think this really has to prioritize universal access. It's one thing to have an SDG 7 that says, we need to cover and provide. I think the impact on the environment from the lack of clean cooking should be on the top part of the agenda. And I think that even at the trajectory we're going at now, we will not hit SDG 7. And even if we provide the power for the 600 million today that need it through a combination of grid, off-grid, and grid, there'll be another 600 million without that power in another 10 years. And I think this is a real problem, and it's not just an African, a global one. So I think maybe that answers your question a bit, but I think green investments are the top priority of the countries that are getting those funds.
Yeah, if I can add to that very quickly, renewables is the need for renewables is going to be balanced with other two priorities, which is industrialization and the ability for renewables to form base load capacity. And that's very important. Right now, that is a challenge. Again, we also need to look at the mix, the availability of resources. A lot of countries, North Africa, and with the recent, gas finds in Mozambique and Tanzania, the availability of resources, especially gas reserves, is going to play a role. So the question is, ultimately, there is a transition to renewables, but there's got to be a mix, for baseload capacity. So that's a question that needs to be answered. Now, access to electricity is another factor. When you look at places that are off-grid, places that the grid cannot get to, or people, population that is under the grid, so the grid gets there, but there is very low power demand, low income areas, the slum areas in major cities, they are under the grid. So getting access to those places, that's where renewables again comes in, because the grid getting there typically economically doesn't make sense. So it's going to be a balance of these three factors: industrialization, availability of natural resources, and then also the need for access. And ultimately, it's going to differ for different countries with respect to these three factors.
And let me quickly chime in this, right? Just to echo what Patrick just said, right? So I'm an advocate of renewables, especially solar and wind, biomass, even geothermal in East Africa. But like Patrick said, right, for Africa to develop or industrialize, it will depend largely on base load capacity, right? Power will get from, fossil fuel and all of that, and coal, and so, or nuclear, as the case may be, like South Africa is trying to leapfrog into that and all of that, right? So base load demand constitutes, more than 80% of African needs, and we must address that. And then for energy security reasons and all of that, we can then, bring in more renewable, capacities, because renewable does not address base load. That's the first point. The second point is that renewable comes at a large, at a cost, it's expensive, right? Relative to gas-fired machine. And this is true. Of course, there are literatures we've seen saying that PV panels is coming down and all of that, but we know that today renewables are still largely expensive, relatively more expensive than the fossil fuels were, okay? And so it does not come cheap, even for the slums and the rural and the semi-rural and all of that. Now, so I just want to put this out there, and it's important that as these various governments of Africa countries encourages, renewables, investment, and all of that, we must understand that renewables has its own limitations, and it's important that we address the demand, the baseload demand, and then augment with the renewables, okay? Because it's expensive, and for government to be able to, provide power for the less privileged, the poor, according to SDG 1, SDG 2, SDG 3, and all of that, what that means is that government has to create the right policies, the right MITO policies. And if you allow me to talk a little bit about this tariff, this MITO tariff kind of structure. For example, I take Nigeria. Nigeria almost got it right with its tariff kind of structure. Nigeria understands that, the country is made up of diverse people, poor, rich, middle class, and all of that. So what government did was to, kind of put the tariff structure in such a way that the industries have a different tariff structures from the residentials, okay, and from commercial customers, as well as even within the commercial structure, the commercial customers, there are different categories as well, the urban, semi-urban, rural, and all of that. The industries and commercial customers literally help to pay or subsidize what the poor people pay and all of that. Of course, that is not to say where off-grid should not be encouraged. We encourage off-grid, but it's a short-term thing. Centralized power generation is still far more, is still much cheaper than decentralized power system. So I just wanted to chime in there. Right. Thank you.
Do you feel confident about disruptions in technologies for short-term solutions like off-grid solar versus disruptive technologies for more long-term solutions that could bridge a gap between an energy reality in Africa to African energy objectives, sustainable energy objectives? Do you think there's enough long-term solutions?
Well, it's certainly a disruption, right? But I don't believe it's a short-term thing. It's a short-term disruption, right? And I will give you an example. Take a country like Nigeria or Angola that Patrick mentioned, right? Nigeria has over 180 trillion cubic feet of gas. So we are a gas country, okay? Abundance of gas resources and all of that. So it's much easier to generate power from gas than anything else, okay? And it's like that in some other countries like Angola, even though Angola, predominantly is hydro right now and all of that. But again, countries have to look at their specific strengths, okay, their competitive advantage. And in the process of providing the, power for the people, ride on that advantage, ride on your competitive advantage, build power, let power be available for the people. And then you can begin to think of energy security, because as far as I'm concerned, I think renewables is more or less, because it doesn't address, because renewable doesn't address the baseload demand, and industries are baseload, to be very honest, right? So because renewable doesn't address the baseload demand, it means that it only augments. So let countries look at their specific needs, their specific resources, their strengths, and take advantage of that to provide electricity for the people.
Was any further comments?
I mean, I suppose I think that, I don't know if you'll agree that there needs to be a focus in policies that can, you know, Africa's obviously benefited from rapid growth from the oil and gas sector, and I just would like to point out that I think it's incredibly important for policies to be inclusive of the entire energy mix when it comes to promoting renewable energy.
Very valid. I wonder, you know, kind of as a summary, and I wonder whether our panelists will agree that it does seem that there's kind of there's obviously the role to play for government in terms from a policy and legislation point of view, but it does sound that private sector should actually take the lead in terms of power generation across all the markets, number one, because they can do it more efficiently. They can, you know, the one angle that the question that I want to raise is, you know, similar with water, actually. Potable water has got the exact same issue in terms from a, you know, desert countries or arid countries where there isn't enough, and they, you know, like Namibia or Botswana or, you know, places where they need to look at alternative sources of water, for example. So power is the same thing, where your consumer in most of Africa, where we said 600 million do not have access to it, and it's probably below the poverty line, which means they can't afford it, even if it's there. Which means that, you know, and that for me is, when you look at project economics and finding finance, it's going to be very difficult to, I guess to an extent, that's why we don't see enough of these projects, is that the economics doesn't stack up to put the money in to build these mini grid or, you know, whatever, whether they 200 megawatt or whatever the size is, because economically it doesn't make sense. So for me, it seems like government needs to set the infrastructure, or actually the policy framework, where private sector can actually generate power and distribute it, but rather let government focus on setting policy that would encourage investment in industry and manufacturing and processing and creating the jobs, because it's business that can afford to pay a premium for power, which would indirectly subsidize the consumer. And it's only on that mix, in terms of your consumer mix, where you can actually get sufficient offtake, or affordable offtake, which means that you can provide power for more than just the businesses. You know, the consumer, the guys in the slums, as you mentioned before, can actually get access to power because it's subsidized by industry who's paying a premium for it. And that kind of works that way across the world, yes? So is that kind of what we're saying Africa as a continent needs to start looking, governments need to look at and say, you know, Eskom privatize it, you know, or whatever your national power company is, it needs to go to the private sector. Let the government look at how do we create incentives to set up the mines, mine the cobalt and all the mineral resources that we can actually then incentivize companies to process it in that market, which will buy the power from the private sector at the premium rate, and then indirectly subsidize the slums and those that can't afford it. So that kind of sounds almost what we're saying as a panel. I see a lot of heads going like this. So I hope we're all kind of in agreement. Maybe, Dan, if we go through just all of us as a round two, because it kind of touched on the policies. What is your take on this as a view?
Well, I love that it's been brought up, and I really like what Goodluck and Patrick have reiterated, that it really comes down to bankable PPPs, and that stems from a conducive regulatory environment. Yes, it needs to take place from the private sector. The private sector has showed itself it's present. There's enough private equity money around. There's enough debt capital to provide. There's not enough bankable projects. And the reason why there's not enough bankable projects is because the conducive regulatory environments are not there to enable the private sector to take the lead. If you look across over 50 countries on the continent, there's 2 utilities that are operating sustainably. If you look at Uganda, look at Mauritius, and you look at these and the roles that the private sector can play. I believe that the utilities need to be privatized and publicly listed for transparency purposes, enabling the population, private sector, and governments to come together so that that can be driven. So yes, The only way to get affordable, reliable power moving forward, properly integrated, is to invite in the private sector to play in with the utilities, not just from the generation, not just from the supply side and prolonged PPAs and challenges. The private sector enters, and we see the lowest cost of power where there has been conducive regulatory environment. Look at scaling solar. Look at get fit programs from what has taken place. When we talk about the cost of that power coming into the grid, it's because the government's priority was put towards having conducive regulatory environments. And so I think more of that needs to happen. If we look at the cost of power in a place, all they have to do is say, for Zimbabwe, I had a meeting with the president and was able to show them what was taking place in Zambia. Look at that set of bankable documents that are being prepared. If you look at the PPAs that are 12, 15 plus cents per kilowatt hour on a solar PV project, and their neighbor is able to get offers at 6, or other places 3, it's because governments are putting the priority towards those proper PPPs. And I think, eventually the utilities need to be nationalized, need to be privatized, and put out for pension funds and for everyone's benefit. That level of transparency will lead to lower costs of power and improve supply-demand relationships.
Just to say again, what were the 2 markets that you said that's running profitable? Is it Uganda and Mauritius?
Uganda and Mauritius, yeah.
Okay. Is that maybe Patrick and Dr. Goodluck? Is that? Do you agree with that statement, that view? Is that the way to go?
I completely concur to Dan's point, right? And I think I started with that, saying that truly governments have no business in the power business, okay? And government have no business in the power business. The simple reason is because this is a capital intensive, business area. And look at Africa, we're really poor, right? We do not have the balance sheet to support, this kind of investment. We just have to create the right institutions, the right policy framework to support private investment in this area. We've emphasized that, and I think we've agreed on that. And secondly, government does not have the backstop instrument to support even the PPA. I mean, I don't want to talk in detail. If you see most of the PPAs that we are currently signing in Nigeria, and even in South Africa and some of those countries are requiring, because of the lack of credible off-takers, require government to support with either PCOA or some kind of, put call option security instrument or some kind of sovereignty. I mean, how do you provide sovereignty to backstop $270 billion within the next 10 years? That is another colonization. This is a disaster. So it's absolutely not the way to continue, and it's not sustainable. I think we are aligned on that. Thanks.
Excellent. Patrick?
Yeah, it's interesting that, the views are crystallizing. With respect to policies, yes. I mean, the challenge is government involvement, policy frameworks. The sovereign guarantees might still be there. However, it's important to make sure these guarantees don't crystallize into debt, which has been the bane of the projects, till date. The typical example is the Azura 450 megawatts in Nigeria, and it was a best case project, which was presented and had World Bank involvement, had a lot of foreign investors, and government backstopped with a sovereign guarantee. But unfortunately, it's crystallizing into debt. The government pays, I think about $10, $20 million every month, due to stranded capacity. So when we look at policy framework, we've got some very good examples. The example that quickly comes to mind is Kenya. If you look at 2013, the IEA data says in 2013, Kenya had just about 25% electricity access, 25%. 2018, 5 years later, it was 75 in 5 years. So how did it make that jump? It was simply because the government was very focused in both centralized and decentralized policies. So it was a mix of both. So the last mile connectivity project, which we probably might have heard about, a key project backed by the African Development Bank, took care of the grid-based centralized solutions, whereby Kenya Power and also the Rural Electrification Authority, implemented measures reaching out to settlements that were not connected, even providing installmental payments for those settlements, because many of them had challenges, just like we talked about economically, with being able to meet connection costs, even though the grid was very close, but they couldn't connect because they couldn't pay for it. So having that structure, that framework in place whereby government could be able to subsidize, give some installmental payments, help to ease that. Again, the government helped with solar, solar power generation in the country, exempted imports, import tariffs, value-added taxes on solar projects. Exemptions were made. So right now I can tell you that without a doubt, in sub-Saharan Africa, Kenya is the hub, for solar projects. And that's simply because, again, the government looked at that and said over, a 5-year time frame, we could put the policies in place. So we don't need to look too far, for a benchmark. That's a great example of government understanding that its role really is to set, the policy and, the regulatory framework, and step out or step back, for, private sector, to drive the efficiencies necessary for electricity access.
Thank you, Patrick. Excellent. Swaz, any last comments from you before we get on to Q&A?
Just to briefly say that I wholeheartedly agree with what's been reverberated concerning policies being characterized by transparency, efficiency, and affordability, and I agree that that should be a priority. Why do you think that there's a mismatch between private equity and bankable PPPs? Dan, if I may ask.
Well, the mismatch is often the return is that there's not enough capital, right? And I think that it's very clear that there's actually so much private equity capital ready for bankable projects. The problem now is that those private equity are going to have to return the capital back to Europe because it can't be implemented. If we look at the return on equity expectations that was built in the private equity market, this has changed drastically over the last, and quite rapidly over the last 5 years, but certainly over the last 10 years. We were talking about a need to achieve, maybe between 20 to 25% equity IRR returns for investing into these independent power projects. If you look at the trend that has come down, it's become, it is different for each renewable technology. And so if you look at solar, you're seeing things that are getting banked that have a 12%. In hydro, you're seeing things being banked at 15%. And that really represents an appetite of, one, that there's excess private equity capital available, but also that when it's done right, that capital can be brought in at a lower cost, thus bringing about the ability for lower cost of power and lower tariffs to the utilities. That mismatch is that they're not shy. Private equity is not shy about what's needed. The private equity is going to follow, and the cheapest equity is going to follow what the DFIs and the banks are going to fund. And I think was clearly brought up by Goodluck and Patrick is that if you get into the nitty-gritty details is actually what is that backstop, right? And that backstop is, or historically, were sovereign guarantees. Those aren't available. Now we're talking about put call options, right? And are those available? And those documents. And so when you get into the nitty-gritty of the core documents of those power purchase agreements and concession agreements, grid codes, and the mismatch between them, that nitty gritty means that the private equity and the DFI said, we can bring you the lowest cost of power. And we've done it before where it's been done properly. Can you please adjust the documents? Can you please adjust this? And the net reward is lower cost of power for the people. So I think that people need to put out their voices also to say, we need to have conducive regulatory policies so that the governments adopt those through very robust regulatory environments. And then the government itself should get out of that power business. And I think that if we really see the mismatches, it's actually very transparent about what's needed. There's been some excellent work funded by many institutions. There's a lead on it from Power Africa that drove wrote a book on power purchase agreements. So that's available on websites, and I think it's kind of a Bible that speaks into what are bankable PPP arrangements. And the capital's there. We need the regulatory policies.
Excellent, thank you very much. So far, we've got just a couple of questions we would like to go through. The one question was, is there any opportunities in terms of renewable energy from waste gas? Landfill gas to energy is the specific question. Any examples? Are you aware of any? And is there any opportunities out there in Africa? I would imagine so. It's kind of endemic for any civilization as we produce huge amounts of waste, and turning that into methane and eventually back into power generation is certainly a very creative way of doing it. Are you aware of any of such projects? And do you believe there's opportunities in Africa? Shall we start off? Dr. Goodluck or Patrick?
Yeah, if you don't mind my jumping in. Yes, so I know a couple of years ago there was the REPIs in Ethiopia, and that was $120 million funded project, waste to power. And I think it was the developers were the Cambridge Industries in the UK. So that project was supposed to be, again, a best-in-class example, for waste to power, waste to energy. However, and I think it got stalled along the way. I just need to confirm it hasn't moved beyond, the commissioning. There was a problem with it. So to that question, there is indeed for waste to energy. And I can tell you one of the projects I'm working on right now is a wastewater project. And it's a sewage project, sewage treatment project. The biogas being generated is basically going to be self-sufficient for the facility. It's not commercially self-sufficient, but to that question, I think there's a huge gap, for waste to energy in sub-Saharan Africa, especially when you look at the volume of waste that is being created. It's just like Dan said, being able to find a bankable project, a mix whereby you're going to get off-takers, you're going to get the right volume of, gas being produced, and, you're going to get ultimately a project that makes sense for investors to chime into. So yes, there's an opportunity, I believe, for waste to energy, waste to power in the region. It's being able to get the dynamics together.
Fantastic. I would imagine that from a Neil's point of view, that would be a fantastic example in terms of getting that off the ground. Right, so just go to the next. Yes, Dr. Goodluck.
No, I just wanted to support what Patrick said. For major cities like Lagos, about 18 million opportunity because the city generates tons of waste every day and all of that. But I think there's been a lot of interest on waste to power. I've seen some of the interest, in the country, in Nigeria. But I think one of the biggest hurdles or challenge around that is the waste disposal and management system here. It's a big issue because in developed climes where waste to power, has been done, waste from the onset, from the disposal, they've been segregated and all of that. But here, all waste are in one location. The waste management system is so poor that, everything is together. So one of the biggest challenges with an investor is how to segregate the waste. It's a big issue here. And we really need to look at that. Otherwise, there's a big opportunity in Lagos. But I think that's a major problem, waste segregation.
Indeed. Yes, indeed. Thank you very much, Dr. Goodluck. So we already spoke, Patrick, you referenced to Kenya in terms of, legal framework or legislation that's in place. And Dan, you mentioned Uganda and Mauritius being, kind of a profitable power producer or framework out there. So I guess, is there any, best case scenario that we look at? Does it exist? Is there any market that we, from a policy point of view, can look at and says, yes, this is the model that markets, whether it's Malawi or whichever other country should look at and say, well, this is a great example. We need to do what they are doing to facilitate, this migration or transition into having a private sector that produce power profitably.
Yeah, I'd just like to add that I think that the leader on the continent for driving down, we look at, let's just take solar technology, and we look at what was done in South Africa and bringing in the competitive landscape, bringing in conducive regulatory environments, having the scale, bringing in competition. They drove down the prices, successful management of the utility scale solar. That's an excellent example. And I think I mentioned before, I think it's important to pay attention to the work that has been done from the, funded from KfW, but towards scaling solar and get fit programs. And I think so much effort has been put into the legal frameworks that have, once they've been adopted, they've been rewarded with the cheapest power from the private sector and the cheapest PPPs. So certainly, I think South Africa is a very great example of what's been done on a competitive landscape. And also, I think a leadership angle on environmental and social governance, also inclusion of the fact of giving back in the communities that you work in. Part of the rating is not just technical and financial scoring in South Africa. It's what are you going to do for the people? Like what are you going to do for that community? There's real scoring that's taking place as to whether it really kind of binds in that when you're bringing in a project, what are you doing for that local community? What are you doing for that country? How are you adding value in a different way? And so I think South Africa has taken an amazing leadership in that there's so many lessons learned that can be brought forward from the way that has moved on a competitive landscape.
Fantastic. Unfortunately, we've come to a close. We are already over our time, but I want to thank each and every one of you for participating today. I think we could have probably going to go on another hour if we really wanted to. There's so much to say about this topic. And hopefully we'll be back, with another relevant topic in the near future. And I'll definitely invite all of you back to participate. But thank you for your time and taking the time to participate in this discussion. Thank you very much. And yes, goodbye. Thank you very much.
Thank you.
Thank you.
Thank you so much.